Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of big business. Sometimes it feels like these companies are speaking in riddles, but don't worry, we are here to translate today. We are diving into a filing from Trailblazer Merger Corporation I, which sounds like it could be about anything, but trust me. There is a story here about money and deals and what it means for the future before we get started if you appry. So yeah, getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below. It's the perfect place to continue the conversation. Alright, so what we have here is a Form 8. This is basically a report company's file. When something significant happens, something that the public should know about right away. This particular filing is all about telling us about a recent development concerning a deal that Trailblazer Merger Corporation I is involved in. The most important part of this filing today focuses on something called a Material Definitive Agreement, which is just a fancy way of saying a really important contract. This agreement is an amendment to a promissory note. A promissory note is basically a loan document, and this amendment means that the loan amount has gone up. So the company Trailblazer Merger Corporation I has increased its loan from Trailblazer Sponsor Group LLC by $250,000, bringing the total loan to almost $5 million. This tells us the company needs more cash and is getting it from its sponsor, which is common in these types of merger situations. It might mean they are funding operations or getting ready for a big step. This section just reiterates that the company has taken on a new financial obligation, which we already learned about from the previous section. This is standard procedure to make sure all bases are covered legally. Now this part is where the real story unfolds. This document talks about a merger agreement. This means Trailblazer Merger Corporation I is planning to combine with another company. This other company is called Cyabra Strategy Limited, and after the merger happens, Trailblazer Merger Corporation I will be renamed Cyabra Inc. Created, it sounds like Trailblazer is essentially a vehicle set up to facilitate this bigger deal. They're going through a couple of mergers here to get everything lined up correctly. The goal is to have Cyabra Strategy Limited become a part of the Trailblazer structure, and the combined entity will operate under the name Cyabra. Incorporated, this is a common way for companies to go public or to combine operations. This merger is a big deal for shareholders of Trailblazer Merger Corporation. Because they will eventually vote on whether to approve it. The company has filed what is called a registration statement on Form S-4, which includes a preliminary proxy statement and prospectus. Essentially, this is the document that gives shareholders all the details about the merger so they can make an informed decision. This part is super important and something we see in almost every filing. These are called forward-looking statements. They are basically statements about what the company expects to happen in the future. Things like anticipated benefits of the merger, timing of the merger, and future financial performance. However, the key thing to remember here is that these are just expectations and actual results could be very different. Many things can go wrong, and these statements are not guarantees. This section lists out a bunch of risks associated with the merger. One of the biggest ones is that the deal might not happen at all, or it might take longer than expected. This can cause a lot of uncertainty for investors and can negatively affect the stock price. Another key risk is whether the combined company can keep its stock listed on NASDAQ, which is a major stock exchange. This is crucial for liquidity and investor confidence. This section is a standard legal disclaimer. It basically says that this report is not trying to convince anyone to buy or sell stocks. It is simply providing information, and any decision to buy or sell should be based on a more thorough review and professional advice. Finally, we get to the exhibits. This is where you find the actual documents that are being referenced in the report. Here we see Exhibit 10.1, which is the amendment to the promissory note we talked about earlier. This is the actual document that increases the loan amount, and Exhibit 104 is the cover page in an XBRL format. This is for machine readability and helps with how the SEC stores and processes financial data. Now let us put on our investor hats and look at the bigger picture. Trailblazer Merger Corporation I, as a SPAC or special purpose acquisition company, has been looking for a target company to merge with, and that target is Cyabra. Run. Strategy Limited. This filing informs us that the loan supporting this merger has been increased. This often indicates the company is moving forward with its plans and needs additional funding to seal the deal. The fact that they increased the loan by $250,000 up to $4.8 million shows a commitment from the sponsor to move this merger forward. It is not a massive amount in the grand scheme of a merger, but it is a concrete step. They are also clearly laying out the risks involved in completing this merger, which is good transparency. Investors need to be aware that these deals can fall apart. The mention of a NASDAQ listing is also important. If the merger goes through successfully, Cyabra Incorporated aims to be a publicly traded company, which means shares can be bought and sold on a major exchange, but keeping that listing is not guaranteed, as the filing points out. The merger itself is with Cyber Strategy Limited, and the combined entity will be renamed Cyber Incorporated. This suggests that Cyber Strategy Limited is the operating business and trail. Blay. Zur Merger Corporation, I is the corporate shell used to bring it to the public markets. What we are not seeing here are detailed financial statements of Cyber Strategy. Limited itself, this filing is more about the procedural steps of the merger and the financing around it for a true deep dive into Cyber's financial health. We would need to see their own financial reports, which would typically be part of the prospectus or other filings related to the merger. Once it is further along, so what is the overall story here? Trailblazer is inching closer to merging with Cyber, and they have secured additional financing from their sponsor to help this happen. This is a positive sign for the deal's momentum, but the inherent risks of mergers remain significant, especially the risk that the transaction might not be completed. The company is being upfront about these risks, which is a plus. The direction of the company seems to be a growth oriented one that aims to leverage capital markets through a SPAC merger to fuel its expansion. Cyber Strategy Limited is the actual business here, and its success will depend on its market position, its products, and its ability to execute its strategy post. Merger. The risks outlined are standard for this type of transaction, but they are real. The ability to maintain a NASDAQ listing and the overall market reception to the combined entity will be critical. In conclusion, Trailblazer Merger Corporation I is making progress on its merger with Cyber Strategy Limited with a % increase in a key loan, providing some financial backing. The future hinges on the successful completion of this merger and the subsequent performance of Cyber Incorporated as a public company. Alright, that is our breakdown of this filing. What is your take on these merger details and what they signal for the companies involved? Hit that like button if you found this analysis valuable, and subscribe for more corporate deep dives. Also, don't forget to check out the Discord in the description below. Thanks for watching. See you next time.